We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Nick Giambruno, founder of the Financial Underground and editor-in-chief of its premium investment research publication, Financial Underground Speculator. Nick, thanks for joining me today.
Hey, Tom, great to be with you.
It's always great to speak with you, Nick. It seems like it ends up being longer than I want between interviews, but that's how it tends to happen here. But, I wanted to start by kind of getting an overview of how you see the current financial environment and where the Fed finds itself at this point in time after embarking on the fastest and steepest rate hiking cycle in history in order to combat inflation here.
Yeah, well, it's just a farce, really, what it is. And you got to start from first principles, and that central planning doesn't work. That's the first principle here. And central planning of shoes doesn't work. Central planning of wheat doesn't work. And central planning of money doesn't work. And so central banks in general, and the Fed in particular, are on a mission impossible. They don't know what the real rate of interest should be. Nobody does. That's a function of the market. This is not that complicated. So a Politburo of central planners can't plan interest rates, and it's inevitable that they're going to fail and that they're going to mess it up big time. And it's also important to remember, central banks have nothing to do with the free market. They're actually the antithesis of the free market. If you look in Karl Marx's Communist Manifesto, of all places, central banking is the fifth plank of the Communist Manifesto. People need to remember these things. They think that all the central bankers are these selfless bureaucrats that are just trying to save the economy. This is all a load of BS. These people are your enemy. Anyways, to get to your question, yes, they had embarked on one of the steepest rate hike cycles in history. But after the COVID money printing caused decades high inflation, so they went on this rate hike cycle to combat that inflation. And at the time, I knew they would never be able to tame inflation. And it's very simple because they have so much debt. The debt levels, if they were able to raise interest rates to the point where it would actually make a difference and tame inflation, that would bankrupt the U.S. government. The interest expense on the debt already is higher than the national defense, higher than the Pentagon's budget. And it's going to exceed Social Security and Medicaid and Medicare and all of these other entitlements to become the number one item in the budget very soon. So it's already one of the top items in the budget. They spend more on interest expense than the Defense Department. And so that's why they couldn't raise interest rates more, because it would explicitly bankrupt the government. That's not how it was, 40 years ago when it was in the 80s and Volcker took interest rates to north of 17%. That's what it took last time to tame a similar level of inflation. And so there's no way they could have taken it to 17%. They barely took it above 5%. So not even a third of what Volcker did. And then they it's over. They've capitulated. It's officially over. The rate hike cycle is over. Now we're going back to easing, and they're going to gaslight you and tell you, oh, inflation has been tamed. This is so absurd. And it's one of the most politically manipulated statistics in all of government, which is saying a lot, actually, because a lot of government statistics are completely manipulated. But inflation is probably the most manipulated. We don't have time to get into the details of it, but needless to say, the notion that inflation has been tamed or defeated is just laughably ridiculous. There is a little meme I saw online that explains it well. It says, well, how can they claim inflation is defeated? And they can't. And this is what they're trying to argue. So imagine you weighed 180 pounds and then over the course of a year, you gained 40 pounds. And then over the course of the next year, you gained 30 pounds. And then over the course of the next year, you gained 20 pounds. And then you stop gaining weight and you're like, yes, I've stopped gaining weight. It's yeah, but look at how it's the same thing with price levels. They're never going down. That guy's weight never went down. So they are totally gaslighting people with propaganda, lies, deception. It's the average person is going to have a hard time seeing through this stuff. But needless to say, what they are telling you is absolutely false, and they're headed for disaster, in my opinion.
Mm-hmm. So, Nick, if we see inflation coming down, and just to kind of round out what you were saying about it being such a politicized figure, CPI, I recently did another interview with John Williams, who goes through a lot of these particular stats and explains how it should actually be put together. But, as we see quote unquote inflation or CPI coming down, can the Fed take credit for that? Or are there other forces that you think are more responsible than the Fed is?
Well, it's impossible to know. And the notion, first of all, I mean, the CPI is trying to measure, it's a basket of prices, trying to measure kind of like the average price increases for 340 million Americans. You know how ridiculous that is? Everybody's price basket is different. Every individual's price basket is different. But just consider somebody who lives in like New York City compared to somebody who lives in like rural Montana. You think these people have the same price baskets? And absolutely they don't. So this is an impossible statistic. It's been likened, the CPI is like telling everybody to, it's like taking the average temperature for across the United States as a way to like decide what you should wear today. Can the Fed take credit for their rigged and manipulated statistic? Maybe, but that's not saying much. The concept is that price increases maybe have gone down a little, but they're never going back to what they were in 2020 or before. People don't realize this. So it's like, oh yay, the price increases have gone down just a little bit, and then that's debatable in and of itself. But they're never going back to what they were. Your electric bill is never going back to what it was. The price of eggs is never going back to what it was. The price of beef is never going back to what it was. So these people are they're gaslighting you. They are engaging in sophistry and deception. So I think they deserve worse than ridicule, frankly. So according to their own rigged metric, have they accomplished their goals? No, they haven't even accomplished their goals according to their own rigged metric. And that is a funny farce, because they have the CPI, which is manipulated, and they haven't even gotten to their stupid 2% target rate, which is what they're targeting, which is totally arbitrary, by the way. 2% inflation. This is so ridiculous. Inflation is poisonous at any level. The 2% is what they are aiming for. And think of a bucket, like you're carrying a bucket of water and it leaks 2% of the water, every 10 minutes. This is what that's what the thing they're trying to build here. So the whole thing is ridiculous. And no, I only give them credit for the destruction that they cause.
Mm-hmm. Yeah, that's a good way to put it. Nick, do you think that there's a risk for the Fed to be changing monetary policy this close to the election? And could it be seen as made to benefit one party or the other?
Oh, absolutely. I mean, it looks like they're trying to pump up everybody's 401ks, everybody's retirement accounts right before the election. And frankly, I think that's a good thing, because it's going to discredit these people, because they're going to look like they're blatantly politicized when they've always been politicized, but they've tried to put on this facade that they've been not political and that they're just these, benign bureaucrats. That's a load of crap. So hopefully that'll help shatter that illusion, because they're forced to. They couldn't have, they were forced to stop the rate hiking right before the election. They don't want the economy to blow up right before the election. They're going to try to pump it up just to, pump up everybody's brokerage accounts, everybody's retirement accounts, so they can feel a little bit wealthier and kick the can down the road. So I think it's dangerous for the country. I mean, when a central bank becomes overtly politicized, bad things happen, and we could give you countless examples. So that's where we're going.
Mm-hmm. When we think about that phrase that you mentioned just now of kicking the can down the road, because of the level of debt and the interest payments on that debt alone, is there any way that the Fed can escape the trap of ever increasing currency debasement at this point?
No, I don't think they can. And I think, people have been talking, this is what people's, eyes glaze over, and they say, oh, we've heard this debt crisis thing for 40 years. And they have, they've been talking about the debt for a long time. But where the rubber really meets the road is the interest expense. The interest expense has not been an urgent issue until now. It is now becoming quickly the largest item in the federal budget. And they've gotten to the point where they are printing money to pay interest. That's typically game over. And they haven't been doing that before. That's why it is different this time. This is why it's different than it was, in the years before, because of the interest expense. That is what is going to kill them. So if they couldn't raise interest rates beyond, I think it was 5.25 was where they got to in this rate hike cycle. How on earth, let's say inflation rate goes to like 15% real inflation. How on earth, they're not going to tame that with 5.25 interest. They probably won't even get back to 5.25. So what does that mean? It means they're trapped in a cycle of ever increasing currency debasement. And I think everything else aside, that is the bottom line. You can just strip out all the noise, all the chatter, all the talking heads. If you want to distill it down to the most important bottom line, is that the currency is going to be debased in ever increasing amounts, and you should be prepared for that.
So, when we think about let's say the extension or the end stages for the US dollar, are we in the beginning stages of collapse? And what are the indicators of this process?
Well, I think the interest expense is a big one. That is that's a primary indicator, I think, because that measures how affordable and how manageable their debt load is, and it's getting to the point where it's out of control. There's that. I don't know when it's going to happen. Nobody knows when it's going to happen, frankly. And if somebody tells you they know when it's going to happen, they don't. It's just a guess. Everybody is just guessing. But you can put together connect the dots and put together the pieces to see where the big picture is going. You don't really know when it's going to happen, and I don't know when it's going to happen, but I know where the trend is going, and so I'm going to position myself for how that trend is playing out. And that's more important to me than getting the timing absolutely right, is if I get the big picture right at the end of the day. And I'm confident that, given that what we're talking about, that this is the correct diagnosis for the big picture.
Mm-hmm. So what are some of the actual indicators of the stages of collapse?
Price increases obviously are a big one. That I think is guaranteed to increase. Prices aren't going down; they never go down. I mean, in a fiat system, they rarely do. So the trend is currency debasement, not just currency debasement. They need to debase the currency by ever increasing amounts. So the indicators, yes, interest expense, price increases, in other words, inflation, which is actually the wrong way to measure define inflation. Inflation is really a change in the money supply, but we don't need to go into that. And look at the money supply. That's the real measure of inflation. Look at the money supply. And these central banks are so deceptive and such liars. Most of them don't publish meaningful statistics on the money supply. It's the very thing that they're in charge of, and they put all these obtuse and misleading and complicated, just give us the damned money supply. And a lot of them don't do that. They just say, this is this type of money supply. They don't give you a simple number when they could. It's not like they couldn't. They absolutely could give you a simple number. So you kind of have to devise it, but it's not that hard to devise in any way. In any case, watch that. That's another indicator. So money supply, interest expense, deficits are another indicator. And the government spending is what's driving all of this, because government spending drives deficits. Deficits drive the debt. Debt drives the interest expense. The interest expense drives the money printing. Those are the indicators. So deficits. What are the three biggest expenses of the government aside from the interest expense? Entitlements, national defense, and welfare, general welfare. So let's look at them one at a time. Entitlements. The baby boomers are the biggest generation, and they're all heading into retirement, with the last baby boomer heading into retirement in like the early 2030s. This is tens of millions of people. I forget exactly what it is, but it's a very, very large portion of the U.S. population. Do you think that any politician is going to cut entitlements with baby boomers entering retirement? I don't think so. Not only are entitlements not going down, they're going up. And those are the biggest expenditures in the federal government. They're going up. Number two, national defense. Do you think they're going to cut that in the most precarious geopolitical situation since World War II? Do you think anybody is going to cut spending? I hope they do. I mean, I don't like this. I don't like being a global empire. I'm just talking reality here. They're not going to cut national defense in the face of this geopolitical situation, the craziest it's been since World War II. That is not going to happen. That's a fantasy. So forget about that. And not only is that not going to get cut, that's going to go up too. So the number two thing is going up too. And welfare. Do you think any politician is really going to seriously cut welfare? Maybe. I would say more likely you're going to get universal basic income and all sorts of other welfare gimmicks. So no, I don't think welfare is going down. I think welfare spending is going up. So those are the biggest. If any, you're not going to make a difference in the budget if you can't cut entitlements, if you can't cut national defense, and if you can't cut welfare. Forget about it. Like if you can't make meaningful cuts in all of those areas, nothing else matters. Like, messing around the corners and trimming the sides of the budget, not going to matter. And I don't think any politician can do those three. So that is really what's driving it. And until I can see, and until there is some credible evidence that those three things are going to be like take chainsaw cuts to those three things, I don't think it changes the big picture.
Mm-hmm. Well, I mean, to your point about reporting proper statistics, the idea that they stopped reporting M3 a couple of years ago is, directly validates your point. And I believe the other statistic that I read recently was that debt service is going to overtake what it costs annually for defense. So when you have expanding costs like that, there's no end in sight to this, to the deficit.
Well, debt service has already surpassed defense spending. That's already happened. And that's typically not a good sign, especially for big empires. The Roman Empire, the Ottoman Empire, all these other British Empire. That's not good when your debt service is higher than your national defense spending. And the U.S. is already there. It happened. It happened this year. So, and it's also over $1 trillion. That's the first time it happened too. That debt service or interest expenses over $1 trillion. That's very important. That means they don't have much room left. And it's also an impetus of why they are going to cut rates now, even though that's going to have a delayed effect on the interest expense, while the overall debt pile continues to grow. So yes, they might cut interest rates, but interest expense is still going to grow because the overall debt pile is getting bigger. So they are really, really in a pickle.
Mm-hmm. And then I assume as we kind of go on this yo-yo or this roller coaster of cutting rates and then inflation rearing back up, I would expect that, at some point in the future, we're going to have to raise rates again to try to combat the inflation that we're eventually going to see from this next round of easing and printing.
Yeah, but they're not going to be able to tame the inflation. If they weren't able to tame it this time, do you think they're going to be able to tame it next time? I don't think so. And I doubt, I don't know, nobody knows, but I doubt they're going to be able to, if they couldn't raise past 5.25% when the debt was, 30 something $30 trillion, when the next rate hike cycle comes, maybe the debt will be 40 trillion, maybe it'll be 50 trillion. We'll see what happens. But do you think they're going to be able to pay 5.25% on $40 trillion of debt, maybe more, maybe 50 trillion? No way they are going to be able to do that. So I'm not betting. I wouldn't bet on that. Like I said, the main bottom line is how are they going to deal with this? Is ever increasing currency debasement? I think you have to plan around that.
So Nick, what then are the asset classes that you think stand to benefit most from a theme like the downfall of a major currency like this?
Well, you definitely don't want to be in fiat currency. You definitely don't want to be in bonds, which are just a long-dated fiat currency. It's a promise to pay fiat currency in the future. That's all bonds are. Those are the two worst places to be, at least over the long term. So I like hard assets. And what I mean by hard assets, things that are hard to produce. That's what a hard asset is. That's what it means. So I like precious metals, particularly gold. I think gold is a much better hard asset than silver. Frankly, silver has some nice speculative value and is nice. I look at silver. I might want to have some silver ounces in case there's a total Mad Max breakdown of society and I have to barter with a farmer to get some beef or some milk. Some silver coins might come in handy there. But as a long-term savings vehicle and a long-term store of value, gold is far superior, in my opinion, to silver. So that's where the predominance of long-term savings ought to be, in my opinion, is in gold and physical gold, not derivatives or IOUs of gold, but real gold. real estate to a degree, but real estate is not not as good of a savings, not at all as good of a savings vehicle. Nonetheless, it's nice to have some, diversification among hard assets, but those are the main ones, I think.
Mhm. So, obviously there's a time loss or a time risk component with many speculations or investments. But what typically happens, do you think, to gold miners in a rate cutting cycle? And is this a reasonable time to start looking at them if you're not already doing so?
Yeah, and look, I mean, gold miners are different than gold bullion. I mean, gold bullion is basically a savings vehicle. It's less risky. I look at it as a saving. It's for savings. It's for long-term savings. That's what you should look at gold bullion as. Gold mining stocks are a completely different animal. They are speculations. They're speculative. That's different than savings. Savings is like your nest egg. It's like your foundation. That's what it is. And speculative is way further out on the risk curve than something that you would use as a savings vehicle. So that's what I view gold mining and other mining stocks as speculations. And yes, I think they are going to be a primary beneficiary. If you're looking to speculate on this underlying trend of currency debasement, fiat currency debasement, mining stocks are absolutely a good way to speculate on that underlying trend. How will they perform in an environment of rate cuts? In other words, an environment of monetary easing. In other words, an environment of more currency debasement. I think they'll do well.
So, by extension, Nick, how do you see, let's say, the commodities complex, or is it just necessarily gold that you're looking at?
Oh, I like commodities. But gold is money, and we're talking about a monetary phenomenon here. So that's the way to protect yourself and profit from that. All the other commodities, they have their peculiarities. They're interesting. Oil, natural gas, coal, the agricultural commodities, copper, platinum, palladium. I mean, these have their own specific demand and supply issues, and you got to look at them, I think, on an individual basis. But I mean, you can make certainly there is room for these in your portfolio in terms of investing and speculating. So yes, I do look at overall commodities. I am interested in the monetary issue. So yes, I like gold and to a lesser degree silver, but I am also interested broadly in commodities because I think they are going to do very well in this environment of currency debasement. I mean, people need raw materials, and they're going to need them. The price of them is going to be reflected in the currency debasement too. So yes, I think they're also a good place to be.
So when we think about your ideal, let's say, gold miner that you're looking at or wanting to speculate in, what are some of the most important factors when choosing a gold miner that you feel comfortable?
Yeah, it is, to be honest, gold mining is not the best business. It's a very tough business. So frankly, I like royalty companies, and that kind of smooths out the risk because you're not taking on too much company specific risk. And so if you invest in one company, oftentimes they just have one project. I mean, it depends on the size of the company, of course, but I don't like to take on too much company specific risk. And a way to address that is with royalty companies. And they're not necessarily, they're obviously traded a premium to regular mining stocks. They're not as cheap. They generally aren't, but for a reason, because they're less risky. But right now, with all of the mining, people aren't really, it's odd because gold is near an all-time high and people are still not interested in these mining stocks. So I think they will. I think it has, if that sentiment is an indication of where we are in the bull market, it would suggest that it's barely even started. Maybe, obviously the price of gold is up, but the average person is just not interested in it. I think that will change. So in that case, I stick to the highest. I like the highest quality companies, the highest quality projects. We're already dealing with a very volatile and risky space. I don't see the need to take on excessive risk. So I'm okay with paying a premium for quality.
Mm-hmm. So what do you think explains part of that apathy or that lack of interest in the miners?
Because I don't think people understand the underlying trend is with this monetary trend. I think if you ask people, they don't know the basics of money. And money, it's really sad actually, because money is such a basic and fundamental thing. People use it every day. And really, people have been hoodwinked into thinking that you need like a PhD to understand money. You don't need a PhD to understand money. Money's been around for thousands of years, way longer than PhDs even existed. All money is a tool. It's a tool to send value through time and space. In other words, it's a tool to store value and it's a tool to exchange value. That's all it is. That's all it is. A toddler could probably understand that concept. So it's not complicated. But most people don't know what it is. And what I mean by that is, think about, they always tell people, they laugh at how brainwashed people were in the Soviet Union, or they laugh at how brainwashed people are in North Korea. And, they say, you go back to the Soviet Union and say, who makes the shoes? And you go to the average guy in the street, and they're like, the government makes the shoes. Who else could make the shoes? And then you ask people today, what is money? It's this piece of fiat paper in my pocket or digits on my bank account. And like, where does it come from? The government makes the money. Who else could make the money? It's the same mentality, except it's much, much more widespread. So, the average person absolutely doesn't understand it. And if they don't understand it, they're not going to get the thesis for the mining stocks.
Mm-hmm.
They will. Once the inflation really kicks in, they'll figure it out. But that's how you make money in the markets. You want to go where, by the time the average person does figure this out, this is actually a good thing. This is not a bad thing. It's not a bad thing. It's a good thing. It means you have a chance to protect yourself and profit before the average person on the street figures it out. Once they figure it out, the opportunity is probably gone.
Mm-hmm. Yeah, that's a good point. And I mean, I think in this space, being a contrarian, especially for many years, it seems like there's no end in sight at times. It seems like there's no promised payoff for this, maybe this delay of, or this investment window just keeps getting pushed out further and further.
Well, yeah, with speculative mining stocks, yes, I would say with gold, if you like I said, if you properly look at gold, if you've held gold for the past 10 years, it has probably done a very good job of preserving gold. You're not going to get rich off of gold. Gold is just going to preserve. Maybe you'll make some money, but its job is not to, catapult you. Its job is to preserve what you have earned, and it has done that job, and it's probably done better than that. So it's important to have the proper frame and the proper perspective of what these things can do, and so you have the proper expectations. Yes, gold is not, that's what gold is going to do. It's going to preserve your purchasing power, and you shouldn't have higher expectations than that. That should be your expectation for gold bullion. It's going to preserve what you own. And that's a very important thing, because what else can you, what else is going to, 20 years from now, what else are you going to have confidence that's going to just preserve your purchasing power? That's good enough for me. And everybody has different investment time frames, but for me, that's good enough. I don't need anything fancier than that. Now, speculating on these mining stocks, these damn mining stocks are taking forever. Yes, so that has taken longer. And people do have different expectations for the mining stocks, as they should, because they're speculations. They're not stores of value like gold bullion is. So yes, I understand. It's been frustrating. I'm invested in these things. Nonetheless, what am I going to do? I'm going to sell them and buy treasuries. Yeah, right. So no, thank you. I'll continue. As long as that big picture is how we described it earlier, I'm comfortable waiting on those mining stocks. If by some act of God that a U.S. president comes in and says, you know what, we're going to end entitlements, we're going to end Social Security, end Medicare, and guess what, we're going to go back to being a constitutional republic, and we're not going to have an empire anymore. We're going to close down all those 100 and something whatever bases around the world, and we're going to end the welfare state. No more welfare. Okay, then maybe I'll reconsider my mining stocks. Until that happens, I'm not going to.
So, Nick, are there any other asset classes that are attractive to you, or you see as a good entry time when the Fed starts to cut rates?
I'm really not a short-term trader. I don't like trading, frankly. I think it's gambling in rigged markets. So I'm not a short-term trader. I don't recommend it, and frankly, I'm not a fan of it. What I do in my research and my work is I look at the big picture and I try to get the big picture right, and I try to get positioned for when that plays out with a reasonable estimate of a time horizon. So I'm not really interested in making short-term trades, or if Jerome Powell comes out and he was wearing like a purple tie today, what does that mean? I don't care about this crap, frankly. I'm looking at the big picture. But that being said, so hard assets, I think, yes, commodities in general, monetary commodities in particular, are going to do well. But we'll see. I mean, if they're going to debase the currency, I mean, look at the stock market in other countries that have had extreme currency debasement. I mean, the Venezuelan stock market has done quite well. So I think just being in anything other than the fiat currency or bonds, which are just long dated fiat currency, you want to be in real assets, companies that are producing stuff that other people want. I know that sounds very basic, but get away from these tech stocks, these NVIDIAs, these grossly overvalued companies. And yeah, that's another thing. This is never, as far as I know, this has not happened before. They're entering this rate cutting cycle at all-time historical stock market valuation highs. That's nuts. So these valuations could go even crazier. But do you want to play that rigged game? Do you want to play that game where, okay, we're going to see how crazy these valuations can go? How high can the PE of the S&P 500 go? You want to play that game? I don't want to play that game. But nonetheless, a lot of people do.
So you mentioned big picture there, Nick, and trying to get that right. Do you think that the BRICS and the work that they're doing to, create their own trading currency, does that have a lot to do with this trend in the US dollar, or is this, kind of another weight against the dollar?
It does, to a degree. Now, it's important to zoom out as far as we can zoom out, and most people don't even realize what era or what epoch are we in? Like, what era? How would you define this era? We define this era as the post-World War II U.S.-led world order. That is the era that we are all alive in. It's the era that's been with us for 80 years. But people don't realize it's like a fish doesn't realize he's in water. But that's what the environment that we're in. It's not set in stone in the universe that the U.S.-led world order is going to last forever. In fact, it's probably not, and it's probably going to go away pretty soon. Anyways, that's the way. If you want to zoom out completely, that's where we are. So, what was there before the U.S.-led world order? Well, there was the Treaty of Versailles, and that was came into effect after World War I, and that kind of had a world order under the Treaty of Versailles, and that lasted until World War II. And then, what happened with World War II, and the U.S.-led world order came after that. But what happened before the Treaty of Versailles? Well, there was something called the Congress of Vienna. That was the overriding world order, and that came out of the Napoleonic Wars in the early 1800s. Anyways, it's important to know that is the big, zoom out the most. We're in this U.S.-led world order. In my opinion, it's falling apart, and it's probably not going to last much longer. And what are we looking at after that? Well, I don't know. Nobody. It could be a multipolar world order where you see the BRICS take a much role in global affairs. Could be something else that nobody even knows. But one thing that seems certain is that U.S. dominance over world affairs is on its way out, probably pretty soon. And as a consequence of that, you're going to see other countries take a bigger role in the world. And I think the BRICS is a manifestation of that. I'm not excited about a BRICS currency. I'm not excited about any fiat currency. I mean, frankly, if you want to dabble in fiat currencies, the dollar is and as bad as the dollar is, and the dollar is terrible. They're all terrible. But the dollar, why would you want to even take on I think this is completely ridiculous. Playing current fiat currencies, you want to gamble. Oh, what's the Swiss franc going to do? Or what's the Japanese yen going to do? I think this is just totally absurd. They're all garbage. And I think the BRICS currency is probably going to be garbage too. I mean, even if they back it by gold, are you going to believe that promise? That's I would rather just have the gold. I'm not going to play around with the BRICS currency. So yeah, it is a sign of this changing global environment. But am I excited about it? Not really, frankly.
Mhm. How does the continued escalation of conflict around the world play into this inflationary picture? And could this also spark the next surge of inflation?
Absolutely. What do you know what goes together like peanut butter and jelly? War and inflation. They go together. I mean, it's everywhere you see war, every war is financed through inflation, at least in the fiat currency era. So yes, don't be surprised. Sear this into your head. War equals inflation. And all of these war hawks, these disgusting warmongers in wherever they are, in the US, in Europe, in the Middle East, they are what they're when they're asking for more war, they're asking for more currency debasement. And these clowns should be treated with less than contempt, in my opinion.
Mhm. Nick, do you see a historical parallel to this time that we can learn from?
Yes, I think this is what the period that we're in right now is a period where the world order is breaking down, and that's kind of a loaded term. I know. I mean, people think different things when they hear this, but a world order really is just an agreement among the largest powers in the world on how they divvy it up. And I view it as no different than, say, like look at it on the micro level. Look at like Chicago. Look at how the Crips and the Bloods and these different street gangs and the Latin Kings and how they divvy up different neighborhoods. It's like that. And then so they have an agreement like, oh, you don't cross this line and we don't cross that line. And that agreement typically holds, but eventually they always break down. And then there's a violent struggle. And then there's a new agreement that reflects the new balance of power. It happens on the micro level and it happens on the biggest level, which is what world orders are. It's the same concept. So we're at the phase where the current agreement between the largest criminal gangs, which these governments are, is breaking down, and it's going to be it already is happening right now. There's a violent power struggle over who is going to be, not who is going to be, but what is the nature of power in this new arrangement, and that's being decided right now. We see the ongoing war in Ukraine, wars in the Middle East, and tensions in East Asia are typically defining it. But I mean, it's a global competition. So yes, we are in the phase where the global order breaks down and there's a violent power struggle. What are the comparable eras? Well, I would say the 1930s and the early 1940s. It's definitely World War II, World War I. The Napoleonic Wars, if you want to go back even further, is a similar situation where Napoleon shook up the world order back then too. So we're in this type of phase. It's a very chaotic phase, and it doesn't last forever, but it's probably going to be with us for the foreseeable future. But that's the environment we're in my opinion.
Mm-hmm. So all of this considered, do you think that this should be motivation for the average person to start thinking about a plan B outside the US or some of these Western countries that are facing similar circumstances?
Oh, absolutely. Who wouldn't have wanted to leave Europe in World War II? Who wouldn't? Only a fool wouldn't have wanted to leave Europe. So yes, absolutely, people should be thinking about a plan B. I mean, it's getting kind of late in the game. You should think about where you would want to go, how you would get there, all of these things. So yes, I think, it's better late than never, but it's pretty late. I mean, we're getting into those chaotic times. So yes, absolutely, people should think of these things.
What countries do you think are, let's say, top of your list to suggest that people start seeking an alternative in?
Yeah, that's tough. Nobody knows for sure the exact nature of how this global conflict is going to resolve itself. And if the past is any guide, Latin America has been spared the worst of this. Probably where you don't want to be is in Europe or the Middle East, or perhaps in a place where conflict might break out in East Asia. Those would, probably be the worst places to be. So, and the U.S. is going to go through a tumultuous time too. I really wouldn't want to be in the U.S. or Canada. So I would say the primary place people should really focus in on is Latin America, and Latin America is enormous. It goes all the way from Mexico to Argentina and Chile in the south. So there's a lot of countries there, and I think they're going to be mostly peripheral in the I mean, yes, everybody is going to get sucked into this global power struggle to some degree, but I think they'll be spared the worst of it. And that's just a theory. Nobody knows. It's just my guess.
Mm-hmm. Yeah, that's, I think a good way to put it is that nobody knows. Because like how quickly things keep changing, nobody can predict what's going to happen next. But we've seen a swing, let's say, to the right politically in a lot of countries that have had elections in the past year. Do you see this as a predictable and maybe cyclical reaction, or is it a sign of real change?
Well, we haven't seen much real change, and frankly, that tells me that these people are just as controlled as the other folks. So it's a fake. It's kind of like a release valve, so the plebs don't get too upset. So we haven't seen much real change anywhere. I mean, look at these fake European right leaders. They haven't done anything. They haven't really changed anything. They still are getting overloaded with migrants. They haven't changed really economically. So maybe they've done some very, very, very minor things, but fundamentally, they're not going to change anything. I mean, very rarely. I mean, maybe there's one exception in Bukele in El Salvador. He did change things. So if you can get somebody like I'm talking about a genuine outsider who is able to take on the entrenched established powers and defeat them and then implement an independent agenda. If you can get a guy like Bukele in your country, then maybe, but what you have in most of these places are fake opposition, false opposition. So I don't have much hope in those countries, but maybe there's a little hope that we'll see a Bukele pop up in other places.
Mm-hmm. Excellent, Nick. Well, that's all of the questions I have for you today. Is there anything else that you'd like to leave our listeners with to think about or consider before we wrap up?
Sure. Well, if people are interested in following my work, the best place to do that is at financialunderground.com. That's financialunderground.com. I've got a interesting special report that discusses a lot of the topics we've been talking about today, and including some strategies on how to protect yourself and profit. And you can get that for free at thefinancialunderground.com.
Excellent. Nick, thanks so much for your time today.
Yep. Thanks, Tom. Good to be with you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.